had a friend reach out today that I hadn't heard from in a while, and he had a couple questions about what books have I liked as far as like learning about the market and about trading. And several years ago, I read this book here, Unshakable, by Tony Robbins. My wife and I had actually just went to the Chicago Bulls Stadium, United Center, and watched Tony, or went to one of his seminars there. And I came home and I thought, well, I'm going to get one of his books and read it to see, what I think of it. And so it was actually surprisingly good, because I knew very little about the market and about investing per se. Anyway, Tony used people like Jack Bogle, the founder of Vanguard. Jack's kind of the champion of low cost index funds. He also used public comments from Warren Buffett, and shared some of his ideas as far as like how Warren Buffett approaches simple S&P 500 indexing. Um, he leveraged Ray Dalio of Bridgewater Associates. Ray's really sharp. I like a lot of his content. I've watched a lot of his like YouTube videos that are basically interviews that he's done over the years. I really like the way he thinks about things. Ray shares his all-weather portfolio that he basically came up with to operate in any market condition. Tony also used Paul Tudor Jones, who's a legendary trader. He had an emphasis on risk management and capital preservation. But one of the biggest things that struck me when I read the book is that the vast majority of money managers do not beat the market on a yearly basis or over a 10-year period. And since I've only been in a 401k, I never really worried about having money to give to a money manager. And so the topic was something I just really hadn't spent any time on. The book stated that 96% of all money managers do not beat the S&P 500 over like a 10-year period, especially when you factor in the fee structure. The book also covered the importance of investing and compounding your gains over time, and how that snowball really grows and becomes powerful, the longer you're able to do that. Um, so this is just a brief description of this book. There's a lot more to it than what I've given, but if that's something that you would be interested in, this would be a book that I would recommend. The next book is from Mark Minervini. This is really, once I started to trade, I wasn't having a lot of success, and I thought, I'm probably falling into the same traps that all traders do. So let me read more books about, maybe an approach that may work. And Mark has been U.S. investing champion on a couple of occasions, and a lot of his students that go through his courses, many of them year over year, are win the U.S. investing championship or place in the top 3. So Mark explains why you are your biggest asset, but also your largest liability. He talks a lot about strict risk management, which really is paramount, because if you want to be successful in trading, you need to fully understand this before you ever begin trading. Mark explains position sizing and pyramiding into positions. He also explains how he uses stop losses and how to harvest gains as you go through your trade. He also explains how you really need to create a trading plan before you ever enter a trade. Like, if I enter the trade and it moves against me, where am I getting out? If it moves in the direction that I hope it to move, how do I trail that thing and capitalize on the gains and not give all that back if the trade starts to go back in the opposite direction. So I use some of Mark's formulas in my trading, um, like trading rules on a day-to-day basis. This next one is Trading in the Zone by Mark Douglas. Mark's book approaches the mental aspect of trading, which is really difficult. And until you do it and you realize, you're putting real money on the line, people can paper trade and figure out, what works and what doesn't. But until you really have skin in the game, there's no emotion tied to that, tied to that effort. So most traders make the mistakes due to fear, is what Mark's book explains. The fear of being wrong, the fear of missing out, that's what they call FOMO, and the fear of losing money. You need to accept risk fully and don't hesitate to pull the trigger on a trade, if it's going in your direction or, away from the direction you expect it to go. Don't overreact to wins or losses. I would say early on, I would, if a trade moved 3% against me, boom, I'm out. But I didn't give it enough leash, and it would actually turn and go in the direction that I was expecting. I have days, even today, where things may go negative $50,000 in a day. There's no emotion tied to that anymore. It doesn't bother me. I can be up 50,000 in a day. I feel excited. I feel good, but I'm not, I keep my mentality in check. Mark also discusses that anything can happen. And a great example of that, this book was written a number of years ago, but thinking of anything can happen, COVID, right? The market tanked. People didn't know what was going on. They didn't know if their businesses were going to close, how they were going to operate. So just keeping an open mind that literally anything can happen. Also, you don't need to know the future to make money. That was another topic that he discussed. But overall, Mark Douglas mostly focuses on the mental gymnastics that surround trading. This here is Peter Lynch with the book One Up on Wall Street. One of the things Peter likes to point out is invest in what you know. And two examples immediately came to mind. One of them is Apple. So back in 2007, 2008, the iPhone's invented. It doesn't take long before everyone's, looking to get an iPhone. Well, that would have been a phenomenal time to, get a position and go long and stay the course, because you would make a pile of money, here in 2025, owning something all the way back in 2010, 2011, when iPhones were really, really cooking. Warren Buffett also recognized this. He's been a giant holder of Apple shares over the years, partly because he said, I think he went to one of his investor conferences, and he said almost everybody had an iPhone in their hand. So he thought, we probably need to rethink our position on Apple. Another one that comes to mind, and this ties into the cell phone, is Ulta Beauty. Think of, the selfie generation, all the people that are using, their phone cameras to broadcast themselves. They want to look as good as possible, right? So Ulta Beauty, if you look back at their chart, beginning maybe 2010, 2011, like I said, when cell phones were really starting to, get picked up by the masses, and if you're going to take pictures of yourself and send them to people, makeup was a big thing. So Ulta Beauty was another thing that, invest in things that you know about. Peter also points out that individuals have an edge over, typical money managers, because they don't have the pressure of producing quarterly results for their clients. People like us can be more nimble. We can get in, get out of stocks quickly, and not have to, move big positions if you have a bunch of people in a firm in a position. Other areas that Peter covers is know the stock type that you're buying. Also know and familiarize yourself with the PEG ratio. Have a 10-bagger mentality, meaning, try to look for small but mighty companies that have the opportunity to go up 10x, go up from $10 a share to $100 a share. And he said also avoid trying to time the market, because, market timing is sort of like fool's gold. You may get lucky and time the market properly one time, but for the vast majority of people, you can't time the market. One of the books that I'm listening to right now on Audible is Reminiscence of a Stock Operator. So this was written like 100 years ago, and there's still timeless lessons that you can take away today. Kind of like Trading in the Zone, this book discusses the mental aspect of your wins, your losses, your excitement, your frame of mind around how your trading is going. Another nugget that is discussed is let your winners run and cut your losses quickly. Many people get trapped by, I bought this stock at $10, it's trading at 9. I'm not going to sell it at a loss. I'm going to wait till I get back to even to sell it. Well, guess what? Many times that thing continues to go in the opposite direction. And anybody that's experienced this knows that you're better off cutting your weeds and letting your flowers bloom, letting the good ones run. Another thing that is in this book is wait for the right setup. Don't just trade to trade. If there's not a good setup, don't screw with, making a trade just because you're bored and you don't have, you're not sure what else to do. Also, the book covers the market doesn't forgive ego. It's okay to be wrong, but don't stay wrong. So that's another tidbit from that book. And the last one I'll share is the Bitcoin Standard, which seems like today would be a great day to bring this one up because Bitcoin just hit an all-time high of 119,000. This one's written by Saifedean Ammous. This book really made me think about money. Like, what is money? It goes over the whole history of like what was used as currency or money, hundreds of years ago up until today. It also gives like characteristics like what makes good money, hard money. Money needs to be durable, divisible, portable, fungible, verifiable, and have a level of scarcity. So when you realize all the money printing that goes on today and has gone on in our past, the money printing really devalues our currency and how it actually makes us poorer. You begin to realize that, why people who actually understand Bitcoin gravitate in that direction. Learning about all that, there's a number of us that have, taken Bitcoin positions in our portfolios because, like people like to hold gold, they treat this as the digital gold. So, anyway, that's what I wanted to share. And